We're 2.5 hours into trading on Friday, February 11th. Hello, traders. Thank God it's Friday. We've had a lot of market volatility, but we've been expecting that. We know that interest rates are going to be moving higher. That means that there's uncertainty in the marketplace. The market never likes that initial first Fed rate hike, and that's what everybody's worried about right now. So let's take a look at the last pick that I did. Sorry, I've been super busy. I've got a lot of stuff that I'm going to be working on, so I want to just get to the pick. Know that I'm going to be doing a few videos a week, but I'm going to be doing less of them. Eventually, I'm going to be focusing a lot more on educational content instead of stepping you through the entire process each day. I'm going to be breaking the process down into components and teaching you specific lessons. Those lessons will not have a trade behind them, but they will be lessons that stand the test of time. I will still do maybe one or two videos that take you through the entire process, but that's not going to be my focus for the rest of the year. I want to get all this content built out, and then you'll have a resource that you can go and visit. You can learn that system, and then when I do these daily videos, you'll understand exactly how everything flows through the systematic decision-making approach. And by the way, this is not about me. I know how to trade. I've taken the journey. I've completed it. I can make money trading. This is about you. This is about teaching you a systematic trading approach that can be learned and that can be replicated. That's my goal. So let's take a look at Tuesday's pick. That was TSN. I loved this big breakout right here. You can see the gap higher, downward sloping trend line, bullish flag formation through this horizontal resistance. It's been able to hold the gains, but you can see the stock has retraced a little bit. I'm expecting this low right here to hold, the low from that earnings reaction, and that will preserve the gap, and then the stock will gradually start to creep higher. Why do I like this stock so much? Well, for one thing, Tyson is able to increase prices because they are a food producer. What's been the big market fear right now? Inflation. So companies that are able to pass along higher costs are going to perform well in this market environment. So I think Tyson is still going to do very well. Look at sector rotation. You'll see that consumer staple stocks have benefited recently. That's also kind of a flight to safety play for asset managers. Energy stocks, basic material stocks, those are the stocks that you should be focusing on. Those are the ones that have relative strength right now. We're going to be taking a look at a couple of them. First, let's get our market bearings. You can see how the market has been drifting lower today, testing the low from yesterday. Yesterday's price action was very interesting. I'm going to give you a brief synopsis. There you've got the big gap down. When you see stacked green candles like this right out of the gate, you know that there's a very high likelihood of a gap reversal. Boom. All the way back. We recovered all of the losses from the open. That's typically a very bullish sign. However, off of the high, once the gap fills and you get this long red candle that erases all of this, not so good, especially since strong trends typically have three bullish flag formations. There, we have one bullish flag off to the races. We never get the second or third. That's not particularly good. So that red candle, you should already be on guard. As the day unfolded, you can see how we had another bigger bullish flag forming. This one is not nearly as good. Why? Because you don't want to see a big retracement off the high like that. We almost retraced half the gains that we had made earlier in the day. A nice bullish flag is just like this one. You barely pull back, it's brief, it's shallow, boom, off to the races. Pull back a little bit, get another big one. Those are the types that you like. Once you start pulling back off the high, this tells you that the selling pressure is actually fairly pronounced. Okay, no problem. There we go. Downward sloping trend line, two long green candles stacked, and then nothing. This is a sign that we're compressing and that we are likely to make a lower high double top, upward sloping trend line right in here, and then this long red candle was definitely a warning sign. Well, it happened to coincide with Fed official statements, Bullard in particular, saying that he believes that the Fed should rake heights 4 times before the July meeting, or the July meeting culminating in the fourth rate hike. That is a dramatic change from what we've seen back in September, when most of the Fed officials believed that we were not going to be hiking interest rates in 2022. Institutions also, Goldman Sachs, September 2022, we don't see any rate hikes happening in 2022. Now, Goldman Sachs is expecting 7 rate hikes of a quarter point this year. So these types of shocks are not good for the market. It's inflation driven, which is a different twist for us. We haven't seen this level of inflation in 40 years. So we'll see what happens. Typically, when the Fed has to raise interest rates, the market does not like that news. It does not like that initial change in policy. But typically, historically, what's happened is the market gets used to the idea that interest rates are going to be moving higher. They evaluate the economic activity. And after 2 or 3 months, if the economic activity is still stable, then the market starts to gradually recover. Everybody takes a deep breath. Everything's okay. And we've seen some of the biggest market rallies during periods of rising interest rates. There is a big asterisk behind that because we have not seen this level of inflation. So we'd ideally like to see interest rates move higher because of economic growth, not because of rising inflation. So that's just something that we have to keep in mind on a longer term basis. I'm a short term trader. What do I care about all that fundamental stuff anyway? I'm just trying to guess what the market's doing 2, 3, 4 weeks out and trade accordingly. And by the way, right now, almost all of my trading is day trading. I'm not even going to mess with the overnight ups and downs. I'm just going to look for opportunities intraday. And thankfully, when I get moves like that and moves like that, I don't need to take overnight risk. I've got plenty of opportunities during the course of the day. So we'll go into the daily chart. Back in December, I was warning you about these types of moves that were happening during a seasonally bullish period. You don't typically see pullbacks like that. That told me that we were going to be up for some volatility in 2022. And sure enough, look at this. And look at these gaps here. Gap, 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 gap. That tells you there's a lot of volatility and a lot of uncertainty. If you're a swing trader with a 2 or 3 week time horizon, you should really be pulling back the reins right now and keeping your trading to a minimal until the FOMC statement in March, because the market's just going to move all over the place. The only approach that you might try is on major support like this, where you've got the 200-day moving average coming into play. That's a nice support level, upward sloping trend line. If we come here, not during the initial fall, but come down, get a nice bullish hammer like that, close back above that support level, then you can start selling some out of the money bullish put spreads on strong stocks, basic material stocks, companies that are going to do well in an inflationary environment. Not tech stocks. Tech stocks are going to have a lid on them until that FOMC meeting. So focus on relative strength. Let's go find a couple stocks. Know that there's going to be a lot of choppy price movement. Know that you've got to wait for that support to be tested. Know that we've got to bounce off of it. Then you'll have an opportunity to sell some out of the money bullish put spreads. But until then, focus on day trading. Look for opportunities intraday. I'm going to go into my search and take a look at what Pop Bull is showing me on the swing side. WU. Nice little breakout here. Grinding, grinding, grinding higher. PBR, I like this. You've got a bullish flag formation, nice big rally right in here, heavy volume. That's also good. That indicates conviction on the part of buyers. Downward sloping trend line, breach to the upside, horizontal resistance cleared. Everything looks good. For PBR, you don't have earnings until 2/23, so you still have time. Now these stocks, all of these basic material stocks, they trade like commodities. What's that mean? That means that unlike tech stocks or consumer staple stocks that can get in a very gradual grind the entire day. These stocks tend to make moves. They pull back, then they rally again. So that's the type of price pattern that lends itself to intraday technical analysis. You get stacked candles in here. You don't want to be chasing here if you didn't catch the move. You want to wait for a pullback. You get the pullback, downward sloping trend line. Okay, this is your entry point. Getting a little toppy, starting to retrace in here. I might want to be taking profits. Draw your upward sloping trend line. For sure, you got to be out there taking profits, and that's okay. Now we start to drift lower. There's really no trade on the long side for us there. Downward sloping trend line intact. Get a nice big move today. Okay, if you miss this part of the move, you don't want to be buying up here. Draw your downward sloping trend line. There's an entry point. Make a nice little profit. Upward sloping trend line. You're out here. That's how you have to trade these stocks. I like PBR. I think it's going to be a nice one, but you've got to wait for those dips and those buying opportunities. Get long, and then wait for the rip and sell into strength. Wait for the next opportunity. Let's go into Pop plus Bull because this is a search from yesterday, and let's see what was firing there. EXPE, we're going to take a look at daily charts. I want to make sure that I've got a good stock on a daily basis before I determine to day trade it. So I'm looking for that longer term tailwind. VLO, beautiful. Breakout there, follow through. VLO looks great. CVX, grinding. MET, actually nice. Horizontal breakout, really nice strength today. Insurance company, banks also have been doing fairly well because banks like a higher interest rate environment. Take a look at TLT, US 20-year Treasury, bottom falling out. That's because as bonds go down, interest rates go up. Interest rates have been rising, and you're seeing the market already pricing in a Fed rate hike. In fact, there's a 60% chance priced in right now that we get a 50 basis point rate hike in March. That's pretty big. A lot of traders have not been expecting the Fed to react quite so quickly. They're behind the eight ball right now. They've had their foot on the gas pedal for way too long. Last year, they were calling inflation transitory. Well, they've since removed that language. They're seeing that this is not temporary. This is going to be here for a while. And now they've got to catch up with the CPI that we had yesterday. We're talking about 7% inflation. That is a very high number. And the bigger the inflation number is, the more pressure it puts on bonds, because if you take interest rates and you subtract out inflation, you've got huge negative real yields on bonds. So that's currently what the market is trying to digest. Let's keep going through BTU. Take a look at that chart. Really nice breakout here. Earnings before the open yesterday, follow through today. Take a look at that 5-minute chart. There you got another big rally, downward sloping trend line. If you get in here, got to keep your stop pretty tight. Draw that upward sloping trend line. Made a little bit of money there, but you can see how commodity stocks pulled back yesterday. Another little downward sloping trend line here. Got a little bit of an opportunity here. Trail your stops up. That's how you have to play these stocks. Big downward sloping trend line here yesterday. Breached the upside. Stacked green candles. Beautiful. Get in here. That's how these stocks trade. Letter C, Citi. Bank through horizontal resistance. Yes, that's pretty nice. Citigroup, actually pretty decent. RCL, starting to get through the Omicron virus, so some of the travel and leisure stocks are doing well. Wells Fargo, Bank. Just taking a look at a stock that I like. I like PBR as much as any. Going down. Alcoa, aluminum. Nice breakout here. Yeah, Alcoa actually looks good too. Alcoa could be my pick of the day. Any of these commodity stocks could be excellent plays. Nice stacked green candles, downward sloping trend line, breach to the upside. That's where you get in. Now you're trailing your stop. Stock starts to stall out, rally starts to stall out, upward sloping trend line, take your profits. That's how you have to play these. I think Alcoa is as good as any right now. All these commodity stocks, oil, basic materials, fertilizers, gasoline, consumer staple stocks, those are the ones that you want to be focusing on right now if you're trading from the long side. If you're trading from the short side, then you can obviously look to some of the tech stocks, biotech, super weak. FedEx actually looks pretty weak as well. Let's put that chart up, and you can see you've got a breach of horizontal support here. Well, why would FedEx be going down? Well, could be related to energy costs. Could also be related to shipping, of course, but broken through that horizontal support level. FedEx does have some pricing power, but on a daily chart, that is a weak one. That is a good short. I think I'm going to leave you with that short. You got some longs in the basic materials group. I'm going to highlight AA. It's a stock that you have to trade. So when you see me review it, if the stock is down, I'm going to be performing technical analysis just like I did. If you're looking for something consistent on the downside, FedEx is going to be a good one. You've got the 100-day moving average to lean on. You've got this downward sloping trend line to lean on. You have this horizontal support that's been breached. Use that 100-day moving average as your stop. I like that for a short FDX. AA, that's your long. Know that you got to trade it from the long side like the commodity stock that it is. Again, look for a lot of educational content in coming months. I'm trying to build out the format for all of it so that I have nice structure and flow to it. I will be posting some videos on each one of those articles as I start completing them. Good luck with your trading. Have a great weekend. We'll see you Monday.